Hey guys, alrighty. So I didn't get to make a video on Friday. Friday was a pretty good day, bear walk for the Bears. But today was even more bearish. So we got a lot to unpack here, so let's go ahead and get into it. So officially, welcome to the correction. It is happening. This is the correction. So now remember, most corrections in markets history and in general, how they work, corrections are about 5 to 10% from the high. If we look at 5%, we're looking at about 498.36. 7.5% gets us down to 485, and a full 10% takes us to about 472. Notable levels is the 100 EMA will be right about the 5% mark. 200 EMA will be right about the 10% mark, a little bit closer probably to like 8 or 9 though by the time we get there. So overall, what we did on Friday is we came down. We had closed below that 512.85 to 513.41 support area. And now we came back up. We attempted to break through the 8 and 20 EMA resistance. However, we were not able to do that. With this hard rejection, full bearish engulfing candle, and closed below 50 EMA, plus we just closed below our range support that dates basically back to February 29, so about over 2 months long now. We are very much so in correction territory. Now, the one thing I will say about the 50 EMA is a lot of times when we see that level broken, it will, much like we saw today, get retested. So tomorrow, I would not be surprised to see a run back up to 508. That also is our previous support, which would now be resistance. So we very well could pop back up here and either close up here and then go lower, or again, like today, we might touch it and then drop. My general target and support to watch right now is 499.88. That is, if you zoom way out here, that is our macro bull channel right here that dates all the way back to really middle of September. We lose that, it's full on bull channel is done. Right now, my target in general is 495.3 before we get a major upside bounce. Now, going over to ES here, same thing. We have the bigger channel here. And, we are still holding our bigger white macro bull channel. So for tomorrow, that support sits right here at 50.84 area. Now, same thing, we closed under our triple demand 51.85 to 52.02 support area on Friday. So if we zoom out here, you can see that we came up, we rejected the EMA resistance, and boom, we hard dumped through 50 EMA. Now, what we're going to look for is 50.71, which is our support for middle of February. If we lose that, we have our longer term support at 49.60 to 49.89. That goes back to early to middle of February. Now, same thing here, 100 EMA support is right at 49.73, so that's a really solid target and potential bounce area. We should look for an upside pop to potentially 51.35 to 39 tomorrow, which is that 50 EMA area. Now, when we go over to the Q, same thing here. If we look at 5% territory, we're looking at about 427. 7.5 gets us to about 415.67. And then the big old 10% correction gets us all the way down to about 404.5 area. Now, same thing here is, we did, however, break our macro. If we zoom out here, our bigger bull channel that goes all the way back to September 21st, that channel was broken today. It is officially broken. Now, again, same thing here is on Friday, we had nicely held our 433.85 to 436.89 triple demand area. Honestly, I was pretty bullish today, and even overnight into opening hour, we were pretty bullish. I was looking that we might get that breakout actually. However, boom, big old sell-off, massive bearish engulfing candle. This is a huge sell-off candle. Volume today also extremely high. We're at 125% on SPY, 137% on ES, 117% on NQ for the 30-day average. So lots of volume, which is a good indication that this is a real sell-off. Now, we are under 50 EMA again, so we could see that bounce back up to this 433.85 to 435.3 area. And then that's likely going to be the nice rejection because that's previous support, which is now resistance. Next two targets we have is 424.44 and 416.85. Those date back to middle of February and then end of January. Our 100 EMA is right in that 421 area. Now, same thing here, looking at NQ, we did break through our macro bull channel support. That's that white line. Now, we have a little bit of a different setup here in that we did backtest and reject, closed under 50 EMA. Same thing here. I had 17,979 to 18,190 as critical, basically a quad demand. We had one more demand and support at 17,859, which we did touch and just barely close over today. So again, I would not be, especially 18,069, would not be surprised to see a move back up to this area, which would also be the 50 EMA before we head back down. Our lower targets are 17,581 and 17,260. Now, when we go over to the VIX here, we're going to zoom out. I've been talking about this massive cup and handle on the VIX for a while now, and it sure looks like it's about to play out. Our 20.65 to 22.64, that's our next major VIX target. You can see we are in an uptrend right now. The VIX this morning too was also pretty bullish. We had a negative 5% day on the VIX this morning. But, again, this morning, everything looked pretty set up for the bulls. We were looking really, really good. But in the end, we ended up getting some more news about the war. And I just think that markets took this as the time for the correction to finally happen. So right now, we're kind of watching that 20.65. And if we really, really zoom out here on the VIX, you can see this macro trend line here. And, it doesn't quite fit with 2020, but if we really zoom out here, you can see using the peak from the middle of September 2022 and then March 2023, we are in a nice downtrend overall on the VIX. So if we see really the 20.65 area broken, we are breaking our basically 2-year-long bear channel, which again, remember that basically brought the bottom of the market. Now, if this is going to be just a correction, I would not expect the VIX to really go over 22. If this is potentially going to be something more major, we very well could see the VIX get up in the 25 to 30 area. And again, there's nothing saying we don't head straight to another bear market. Now, again, I think that's a little overzealous to get there. And remember, if we're going to a bear market, we have to see a 20% drop from the high. So that would be all the way down right now. That would put us basically, if we lose 419.95 on SPY, sorry, you can't see, there you go. That puts us in a bear market. And the Qs here, a bear market starts, let's see here, at, oh, we got to go a little bit lower here. So bear market on the Qs, look at that, I have a level right there. 359.1 puts us in a bear market on the Qs. Now again, that is, which is crazy, only November 2023. That's our level. So basically, if we get rid of the pump from the last 6 months, boom, right there. If we get rid of the pump from the last 6 months, then we're in a bear market. So, which is funny because obviously that, we would still be almost up for the, year to date, or not year to date, but sorry. But over the last year's time period, we would still be up. So pretty impressive, honestly. So we'll see what this market brings. One thing I will tell you, if we're heading into a correction or a bear market, just like a bull market, nothing goes straight down, like nothing goes straight up. Expect bounces. Today, trading wise, intraday was actually really, really nice and really, really smooth. I don't expect it to be like that always. Friday was kind of a painful day of trading. We had so many choppy 5-minute candles where, you would set, like I said, you get up 5 points on ES instantly, basically like instant hits. And then, it would rip back up 10 points and then drop 30 points. It was really, really volatile. Today was really smooth where we basically would slowly build up to a rejection and then boom, instantly drop. So, it was way better today. I would love to see a bear market or a correction that trades like it traded today, but I would not hold your breath on that. But overall, we'll see what this market brings, and I will see you guys tomorrow.